स्क्रीन विजिबल है? Good morning, student. Now we discuss the lesson number 3, that is the company final account. As you know, in 2013 there is almost number of changes done and recorded, and according to that there is one changes, that is the change in recording or answer written down, sorry, change in various headings related with the balance sheet and final account of company final account. So what is why it is recorded? It is according to schedule number 6. So what is schedule number 6? Schedule number 6, it is a preparation of balance sheet and profit and loss account as per the new instruction or the new rules and regulation provided by government. So what are the basic points or what are the insight into schedule number 6? What are the changes done in this schedule? There is a need to change, almost means there up 50 years before they changes, that is in 1956. So you are aware about the Company Act 1956, and at that time whatever the changes are there, it is still continue in current up to the 2011. And in 2011 they changed or therein after referred as in schedule 6 to keep the pace with the changes taking place in the international arena. So in this heading, the financial to be prepared for accounting year commencing on or after 1/4/2011, means whatever the rules are applicable for the preparation of financial statement, it is applicable after the 1/4/2011. Revised schedule 6 is applicable to all the company. It is important part. It is compulsory to all the companies. When we discuss the revised schedule 6, it is a silent for its applicability to consolidated financial statement as per accounting standard 21. So they are not be explained anything about the consolidated statement related with the company, which require consolidated financial statement to prepared in format as adopted by its parents standalone. Revised schedule 6 is also applicable to the consolidated financial statement. So you cannot say that it is not applicable to the consolidated financial statement, but it is applicable in some area. Then comparative figures are present in the revised format, means previous year as well as the current year values should be present in the books of accounts. So the unlike the old schedule 6 where the options of horizontal or vertical form was available, revised schedule 6 presentation of balance sheet and profit and loss account shall only be done in vertical format. As you know, it is there are two types of format of writing balance sheet or the financial statement, one horizontal or vertical. So now onwards, horizontal means you can write it in a T format, T balance sheet, that is the debit, asset and liabilities, etc. But now it is compulsory to prepare it in vertical format. So the most important points in revised schedule 6, new prescribed format for statement of profit and loss is based on the nature of accounts. This is aimed at bringing more standardization for comparability to the presentation of P&L account. As per current practices, in absence of prescribed format, various modes of presentation include functional and hybrid classification were accepted. Means whatever the old balance sheet, old P&L or the preparation of old financial statement are there, it is changed with the some new changes. Then one more headings is added in your schedule number 6, that is the appropriation of profit. Appropriation of profit should form part of notes to account and not a part of statement of profit and loss account. Means whatever the transfer to dividend reserve, it should be prepared, but it should be prepared in notes to account, that is the working notes to accounts, but not in your profit and loss statement. Instead of schedule to financial statement, all details shall be given in the notes to accounts. So there is no specific rules for the recording of record the name of schedule, but it should be prepared in working notes or the notes to account. So the trade receivable outstanding for 6 months or more than from the due date instead sales invoice date. So the outstanding means whatever the related with the transaction of debtors, it is recorded date due date instead sales invoice date. Quantitative disclosure related to turnover, raw material purchase, install capacity, actual production, detail of manager remuneration are to be dispensed with. Dispensed with means record with various aspect or under the various heads, different heads. What are the general instruction for the recording of transaction? First, disclosure requirement under revised schedule 6 are in addition to or not in substitution. Means whatever the disclosure means show whatever the required information related with that particular event, and it is a compulsory and it is not a substitution of a disclosure requirement specified in accounting standard and companies act. For example, the disclosure requirements for are minimum and any line items, sub-line items and subtotal shall be presented as an addition or the substitution on the face of the financial statement when such is relevant for the disclosing financial position or performance or to cater to industry or sector specific. For example, you can say whatever the compulsory recording or the mentioning are there or notes are there, it should be mentioned in the books of accounts or the preparation of financial statement as a notes to account. And next, no possibility of conflict between accounting standard and schedule 6 as on modification of accounting standard prescribed under the Companies Act, and schedule 6 would stand modified accordingly. Means whatever the of rules and regulation, you can say accounting concept, conveyance and principles are there, it should be followed while the recording of schedule number 6 or according to this. All disclosure required by Companies Act to be made in notes to account. Means whatever the transaction, you are not recording capital as it is in the vertical form of your balance sheet, but you should prepare it the notes to account and then it should be recorded. So it is called disclosure under Companies Act. Donation to political parties should be shown separately through. It is not required as per schedule 6 as the same is required under section 293A of the Companies Act. Then notes to account shall be contain information in addition to the information contained in financial statements such as narrative notes, disaggregation of the items shown in financial, for example long term and other investments etc. Includes items such do not qualify for recognition in financials. For example, managerial remuneration is the example which is not qualified for the recording or the recognition in financials. So continue with the financial statement should not provide excess detail and at the same time it should not hide important details. Means whatever should be disclosed, it should be important and it should be disclosed in the books of accounts. If minor points are there, it is not necessary and nothing will be hide from the recording of transaction. So the turnover or any figures can be round up. If the any figures less than rupees 100 crore, it should be convert nearest 100,000 lakhs or millions, or 100 or more nearest lakhs, millions or the crore or the decimal. Once unit is used shall be uniformly used. Means whatever the amount rupees or the values are used in the recording of transaction, it should be recorded at the end of the financial statement. For the revised schedule, the terms used therein shall also be applicable accounting standards. Means whatever the related standards are there, related party disclosure are there, it should be recorded in the books of accounts or the financial statement. In the preparing of balance sheet word, in previous balance sheet we prepare word or write word current year. So in current or the new format of balance sheet, it is written as a current reporting period, whereas previous year record as a previous reporting period. So you can see when you prepare your balance sheet, there are the two columns of recording of amounts, that is the current reporting period and previous reporting period. Cross referencing each line item with the notes and vice versa required. Means whatever you are recording, for everything you have to prepare notes to account. So these are the general instruction. So now we discuss with the comparison between old and revised schedule 6. So what is old balance sheet or what is the old provisions related with the preparation of financial statement? First, disclosure. As you know, revised balance sheet schedule or the schedule 6 is in vertical, only in vertical format, but old schedule you can use it horizontal as well as vertical. In previous disclosure format, in new or the revised schedule, we are recording only equity and liability and assets are disclosed. In old schedule, you are unaware about the word source of fund and application of funds. So source of fund means liability and application of funds means your assets are disclosed. So disclosure heads only in new schedule or the new schedule, sorry, according to schedule number 6, four heads are mentioned for the liability side. First, shareholder fund. Second, share application money, pending allotment. Third, non-current liabilities and current liabilities on your liability. Whereas on on old schedule or the old provision, only shareholder fund, loans funds are the two headings are recorded. And for asset, in old, in new there are two headings, non-current asset and current asset. And in previous heading or the old syllabus, old schedule number 6, fixed asset, investment, current assets, loans and advances as well as miscellaneous expenditure are the four heads are recorded on the asset side. So the again fixed asset are shown under the non-current asset and are bifurcate in the tangible and intangible asset. Means there are the another categorization for the fixed asset. There are the two sub-categorization prepared in new revised schedule 6, that is the tangible and intangible. Whereas old schedule there was no bifurcation required for the tangible and intangible asset. All assets are recorded under the one head as an asset, whether it is a tangible, whether it is a intangible. So the borrowings are the new inclusion in the revised schedule. That is, a long-term borrowing is to be shown under non-current liability and short-term borrowings to be shown under the current liability with a separate disclosure for secured, unsecured loans in both categories. So you can say in borrowings also there are the two different heads are recorded, secured and secured and unsecured. But in old schedule 6, short term and long term borrowings are grouped and there is under the head of loan and with subhead secured and unsecured. So you can say there is no proper provision for the borrowings are mentioned in the old schedule number 6. Investment, no separate head for investment. It is bifurcated into the non-current and current assets. So in revise or the in old schedule, all investment to be disclosed under the head of investment. But in new revised schedule, there is no separate in head of, or there is separate working for the investment are prepared. Loans and advances, no separate head is bifurcated into non-current and current asset. But in case loans and advances are disclosed along with the current assets. So these are some basic difference as well as general instruction for the preparation of revised balance sheet or revised schedule 6. Now we discuss with the format of part 1, part A, form of balance sheet. It start with the name of the company and balance sheet as at whatever the date. There are, as you see, there are the 4 columns present on the left hand side, and then note number, particulars, note number, figure as at the end, current reporting period, previous reporting period. So this is the format of your balance sheet. So in this balance sheet, as we discuss in above headings, equity and liabilities as well as current liability, there are the two headings are there. So in equity and liability, first heading shareholder fund. Again, these headings divided means shareholder funds include share capital and reserves and surplus. Next heading, money received against share warrants. Next main heading, that is the share application money pending allotment and non-current liabilities. Non-current liabilities includes long-term borrowing, deferred tax liabilities and other long-term liabilities as well as long-term provision are present in your question are recorded under the head of non-current liability. That is the point number 3. Then question, point number 4, that is your current liability, and current liability again divided into short-term borrowing, trade payable means your creditors, other current liability and short-term provisions are recorded. Short-term means which is paid or settle off within 1 year. So these are your current liabilities. Short-term borrowing, trade payable, other current liabilities and short-term provision. It is the total of your balance sheet liability side. So it is as you see, there is no T format for the preparation of balance sheet. It is in your statement, or you can say it is a vertical format of preparation of balance sheet, which include the first part, that is liability, equity and liability. And equity liability includes shareholder fund, money received against share warrant, share application money pending, non-current liability. Again, non-current liability includes four headings, that is the long-term borrowing, deferred tax liability, other long-term liabilities, long-term provision, current liability. Short-term borrowings, trade payable, other current liability, short-term provision, etc. are the headings of your liability. Then continue with the total liability. Now we discuss the part 1 form of balance sheet, asset side. The assets also divided into four parts. Two parts, that is the non-current asset, which again includes fixed asset. Again, fixed asset divided into two parts, tangible asset and intangible asset. Third, that is the capital work in progress. And fourth, intangible assets under development. B part, that is the non-current investment are recorded here. That you can say there are the, if the any investment or the amount appears on your question, that is for the investment in government bond or investment in any long term done by organization, is recorded under the head of non-current investment. Then next point, that is the deferred tax asset net, the long term loans and advances. If any long term loans and advances are there, it is recorded under this head. Other non current assets. And second point, that is current assets. What is current asset? The current asset which is collect a sum or revenue within the 12 months or within 1 year. So the current investment, the investment which is sold or which is released within a 12-month period. Inventory means it is a stock. Trade receivable, that is your bills receivable. Cash and cash equivalent, which includes all cash, bank balance with this heading or the within the notes of this calculation. Short term loans and advances, if any, and other current asset is the, this is the format. And there is a total of total assets. So you can say assets include only two headings, that is a non-current and current asset. Non-current asset includes fixed asset, tangible asset and intangible asset. And current asset includes current investment, inventories and all those things. So this is your balance sheet of format of balance sheet.